Welcome to Insights. I'm Eric. Thanks for stopping by. We're going to talk about the grain market again here today. We're looking at the evolution of the trade. We're looking at any changes that we've seen with it, but we're going to also talk about volatility and how a turn generally looks within the evolution of the trade inside the matrix here. Right now, when we take a look at the name column between corn, wheat, and soybeans, we don't see any commentary. There is no nomenclature other than just their names, and that's because the composite trend is out of alignment. The daily is down, the weekly is up, and the primary trend is up. So we have up primary, up secondary, and down tertiary. Because of the lack that the three time frames are out of alignment, corn and soybeans and wheat are all in consolidation. The grain market's in consolidation. And it's going to stay that way. It's going to stay that way until either the daily turns back up or the price continues downward, bringing the uptrends and turning them down, and then resetting them back up eventually. You can't turn down every time frame and maintain the long position, because eventually enough selling will come in and it'll knock the primary trend down from up to down, or knock it out of its upside alignment. So this is something that if you're going to stay bullish, we have to maintain up, at least in the primary trend. And right now we're resetting the daily. We preferably would like to reset the weekly. The price cycles are here. The time cycles are here. They're noted by BUS and BUST. They're all bolded red, and with the exception of corn on its price cycle, which apparently it's not going to do that on this cycle. But those are all warnings. It's warning that the price cycle is extended on the weekly time frame, and also the time, which we can see the time here, 53, 57, and 55 weeks. That's pushing the limit from the database to going back to about, I think the database for that goes back to 2000 in that time frame. If we look back on the long databases, these numbers come down a bit, but they're still pretty close to 2, which tells us this rally is running out of gas in terms of the price and time cycles in the weekly time frame. So when we look at the weekly, this is what we're studying. We're studying the LTCO and LTRV, but really it's just the LTCO that the computer's worried about. I keep an eye on LTRV because it tends to move down faster than price often. But we're still in a green box because these two time series are above the dotted line, which is 0. So that's in corn, but we are down below 0.25 for corn. We're down below 0.25 for soybeans. I think soybeans is the lowest one out of the 3. It's quickly approaching the 0 line. And wheat is still close to 0.25, but again, it's been close to that a couple times. But all you really want to focus on is the green box, and the computer will do that inside the matrix here, because it'll be up, and that's a green box. We can just see it visually in the charts. So we can see with the weekly trends, they still stand up, but they could come down. The question is what is it going to look like when we have a viable composite trend and a trend that's finally ready to move? So if I bring out the composite trend graphic, this is the composite trend here. It represents the 3 different time frames: the primary trend, secondary trend, and tertiary, daily, weekly, monthly. So they go up and down and up and down. They follow their own cycles. The computer recognizes them and establishes them. And then we study them through the movements of the normal cycle relative to a z-score system, which is standard deviations away from the norm. But in general, inside this a price cycle, there's price, and then there's time. So this is time, and then there's price, and so those are 2 moving together. We've talked about those before. And the weekly time frame for all the grain markets, mostly price and time cycles, are extended, which means they have abnormal cycles here. They're not the normal wave look that we're used to seeing in the group. So it's pushed, and it wouldn't hurt if they reset a normal cycle. The one other thing that the computer talks about or follows, which we don't talk about too much, is the expansion or the volatility cycle, which is another cycle that takes place simultaneously with price and time. It's related to both of them. It's mostly related to price, and time is kind of independent of it, but it's a function of time as well. Markets move from a state of expansion, which is acceleration, can be up, can be down, to compression, where there's very low activity. People recognize volatility in terms of Bollinger Bands. The computer's study of them is similar to that, except our measure of volatility is a bit more dynamic than fixed Bollinger Bands. Bollinger Bands are static representations of volatility across a fixed time frame. This is volatility measured across multiple time frames, and it adapts relative to the cycle. So you don't just pick out a 30-day cycle. It adapts to whatever the cycle is for the security that we're studying. So the expansion and compression cycle is different for each asset inside the matrix. But the whole point here is that if we look at the matrix itself in terms of the grains, there's no nomenclature here. You would see here compression, expansion with arrows against them. I don't have any examples of them. We've seen them before, and I've shown them here in the composite, what they look like. You'll see this down arrow for high compression, up arrow for high expansion, or lots of volatility. This is low volatility. It's measured by compression. Those are measures of volatility similar to Bollinger Bands, except it's unique for the asset that we're studying. In this case, the grain market shows none of that. It shows up over here in the cycle and the sigma reading, and sigma is pulled in right here, but there's nothing here. It's because the composite trend is stuck between a high compression state and a low compression state. If we come back to here, in a high compression state, everything's moving higher, it's breaking up, it's moving, you go from low compression to high compression, and then everything starts to turn, and as we reach a low point where everything is slowing down and none of them are moving, the price is not really moving in a direction that's consistent. It's kind of like it goes into a trading range. Then you represent by a low compression market. We're somewhere between a high compression and low compression market as these time frames start to turn down in unison. We have only one time frame down. We have the other two up. If you get the weekly to come down, eventually what's going to happen is the market, which was in a high expansion or expansion state not too long ago, is going to move towards compression. When it does that, you're going to look at the consolidation phase that either corn or any of them in, and we can take a look at one of the charts. We'll head back to the matrix and take a look. We are moving a little bit downwards, and it's kind of moving sideways, whether that be wheat or if it's even corn, it's downward. But there's really, if you blow it up and look really close and look in tight, we're in consolidation from here to here. It's bound by here to here. It's probably bound between two reversal points that the computer that we can see. But this right up here, this point represents high expansion on the weekly time frame. But it was also high expansion likely on the daily, and it was also high expansion on the monthly. There's no accidents. You make a lot of money when a market is in an expansion state. You don't want to chase it, but that's where all the profits are made. It's either made on the short side or it's made on the long side. When a market enters consolidation, cause building we call it, it stops moving higher or moving lower, and it has trouble generating any type of acceleration. So what's taking place is the market is gone from a point of expansion and it's heading towards compression, a low volatility state. That usually happens before the market then jumps the creek or breaks the ice. Because after we reach a compression, a high compression or low volatility state, downward calm, we're going to move to a high compression state. That's the next cycle that comes, a cycle up, cycle down. So as price gets squeezed through this tube of toothpaste and we push on these two ends, it's going to squirt out the other side, and that's going to push it, either price is going to rally or price is going to decline. So it's either going to jump the creek or it's going to break the ice, but it comes through a state of compression. So ultimately what we're looking for, and every subscriber is going to be looking for, is not only alignment of the three time frames, and we'll back out of this chart because it's not too useful, We're going to wait for the 3 time frames to align, up, up, and then up. If we pull this one down, they would need to come back up, but you're going to need an alignment of the 3 time frames. If the time frames come for alignment and it comes when it's in a compression state, then the computer is telling us that the tube of toothpaste is going to get squeezed really hard, and price is going to move through the other end towards expansion at an accelerated pace. So we're looking for these down arrows and come in corn, soybeans, and wheat in the coming weeks. For that to happen, we're going to probably have to pull the dailies down. We're going to have to make the weekly trends going to have to quiet down and fall into compression, and we can see it's doing that already. Compression is a measure of BW here. That's plus BW, and they're here, and you can see it even in soybeans. This is high, this is expansion. This is when the market really takes off. It stays up in an expanded state during most of the rally, and then when it loses that upward acceleration, it starts to compress. And this is just the weekly time frame. The same thing's going to happen on a daily time frame. The same thing's going to happen on the monthly time frame, just to varying degrees. The computer will pick up on that, and it'll put out a down arrow signal here when the market in general, the composite trend, is highly compressed, which means then it's ready to move. So once we know it's ready to move, it's just a matter of probabilities whether it jumps the creek or breaks the ice. Either one of them are possible. We have to understand at that point in time where the energy bill lies and where the primary trend is still, the direction of it. The upward acceleration or downward acceleration or acceleration out of compression usually follows the primary trend, which is the path of least resistance. It follows where the energy builds, what they favor before it happens or while it happens. And those are all things that we can keep an eye on in the future. So what we'd like to see in the coming weeks, it could be a month away, is some sort of compression. There's no guarantee that it'll come, because in order for that to do that, the market's going to have to lose interest, and they often do come. Compression usually comes when no one's paying attention. So I'll be waving my hands when compression's there, but people will be so disinterested by the grain market, they'll probably have moved on to something else, and nobody will pay attention when the time comes. But these are the things that you really want to pay attention to. Watch for calm markings across the board in the grain markets in the coming weeks. If you're a subscriber, this matrix is updated every day, so you want to, whenever you get a chance, download it and follow it, take a look, wait for that, look for compression. Hopefully you'll see it before the primary or the composite trend realigns again. If the composite trend realigns without compression, perhaps it's not ready yet, perhaps it's a false reset, and that you just want to ignore it and wait for another one, because you really would like to see the reset that comes with a high energy build in a low compression state. So that's basically the setup, and that's what we're talking about in terms of the grain market. But this applies to any market, but that's how you read the composite trend, which is a price and time cycle, but it's also a volatility cycle that takes place across multiple time frames. We follow the daily, weekly, and monthly time frame. I know it gets confusing, and I know people are like, well, I haven't had enough of following all this, it's too complex. But once you start to realize this and remain patient, you'll wait for the right setup, and you'll know when the setup is a lot more powerful than the other ones. But the problem is they don't come around a lot. Markets need time to set up properly, except human beings are pretty impatient in general. So it's hard to teach patience. The only thing we can do is try and show them the evolution of the trade and understanding of the complex nature of trends, the simultaneous nature between the daily, weekly, and monthly trend. Teach them about the price and time cycles, but also the volatility cycles that play in here as well. There's more conversations and more discussions about this in the link pages. I'll probably put this video up under the help files, under the compression section of the blog that describes this. Maybe I'll leave some of the links under the video. If you have any questions after you do your research on this, contact me back. Let us know. We'll leave this one up because grain market's still not ready. It still needs time. We've come down a lot. People are losing interest. People are losing faith. I'd like to see a little bit bigger energy build in wheat, but I suspect it's coming. These are pretty high energy builds, so that tells us that there's someone there waiting. It just needs the right setup. So waiting for when it comes. Trust me, I'm not going to leave you guys hanging. We'll talk about it. I'll probably talk about it for subscribers. So thanks for watching the video. We'll have fun watching the grain market.